Higher yields require high-performance crop nutrition. Through fusion technology, Micro-Essentials is designed to increase nutrient uptake throughout the growing cycle. The unique chemical composition of Micro-Essentials creates an acid zone around each granule. Lowering the pH promotes the formation of dihydrogen orthophosphate, a more readily available form of phosphate, resulting in increased nutrient uptake. With Micro-Essentials SZ, plants more efficiently take up zinc because each nutritionally balanced granule delivers zinc evenly across the field. Micro-Essentials also contains small elemental sulfur particles designed for faster oxidation to sulfate and increased uptake. The proof is in the performance. Research shows that plants take up nutrients more efficiently with Micro-Essentials compared to traditional fertilizer blends, resulting in higher yields and higher profitability.
Good afternoon, everyone, and that's a very loud mic. Welcome to the Red River Farm Network Issues and Events Center. We are getting ready to start this awesome market panel discussion, but before we do that, I'd like to go through some introductions. I'm Kara Hart, a farm broadcaster with the Red River Farm Network. Joining me on stage is Randy Conan, and we've also got Megan Overby, who just wrapped up the markets, Don Wick in the back, Heidi in the back, wave Heidi, yeah, and Jay Rader, and did I forget anyone? Anyway, our team here, we have also three excellent market panelists joining Randy and I up here on the big iron stage. We've got down by Randy, Tommy Grisafi with Advanced Trading. Next to Tommy, Kristi Van Ahn of Van Ahn and Company, and next to me, DuWaybe with Bolt Marketing. So we welcome your questions throughout this session. And we do have a few microphones out in the audience, so if any of you have questions at any time, just raise your hand and someone will come find you with a mic and you'll be able to ask your questions. Also, a friendly reminder, this is being live streamed as well. So you are, whether you're joining us virtually today or if you just want to go back and reference anything, all of this content will be available at rrfn.com after the session. So to get us started today, I thought we'd kind of look at today's markets here. We kind of had a turnaround Tuesday. We had a lot of upward momentum, it seemed, to start the week on Monday. Would someone like to just kind of comment why we saw the lower grain markets today?
Well, because it's not the NASDAQ market, and it's allowed to go down. We're not trading Tesla. We're trading corn, beans, and wheat, something the government's still subsidizing you to grow. They're paying you to what we thought was lose money, and now we're actually in the make money category, at least for beans and possibly corn. So in the Midwest, I've seen pretty good yields, and we're going to have a harvest. So over the next few weeks and the next month, we're going to have the most grain on hand that we're going to have for the next 12 to 14 months, regardless of how much China's buying. I guarantee you we will not run out of grain in America the next month. Now, maybe 2 years from now, we'll have $6 ground beef again, and we'll be limited to 2 pounds, but today we're not. So that's what happened, in my opinion.
To add, DuWaybe?
Yeah, markets were overbought. There's no doubt we've had, what, a $1.30 rally. I think I talked to Randy earlier in the day about that in soybeans. So it was due for a pullback. You know, earlier this morning I started to question whether it was more than just a turnaround Tuesday pullback, because you saw spreads top off on Friday. At least I think they topped off, and spreads went down. So we're bear spreading. In other words, a nearby contract is down more than the deferred. Then you also saw put options got a little expensive on Monday compared to where they were a week ago. Just kind of makes me wonder if maybe the market knows something that we don't. Maybe the market has topped. I mean, I'm not going to sit up here and call it top today, but it does. There's a few signs of that anyway. So really, tomorrow morning will be interesting. Thursday, do we get the selling to come, or was this just a one-day thing? We did have China buy again this morning, and you know, there's some thoughts that if China keeps buying, we just keep going higher. But as Tommy pointed out very well, we're not going to run out of any beans in North Dakota in the next couple of weeks. In fact, we'll have plenty of them. So markets should turn down in harvest at some point in time.
Yeah, you hit a psychological level of $10 in November soybeans that, you know, kind of switches the mentality to a degree of being a value buy when you look at the soybean market. So that brings a little bit of tricky. You're running out of those buyers to step up and continue to push this market along. Like I said, you also look at a chart, you look at the last 15 days, you've been aggressively higher, so that keeps people a little bit shy away from coming into the market as well. You also look at, you know, corn as general. Corn lacks a lot of story behind it. It seems to be a little bit of a follower here. You were hoping for a little bit more out of the Friday report from USDA. We're still looking at a 2.5 carry out. That's huge when you come to terms with it. They did acknowledge acres out of, you know, your harvested acres. They acknowledged a yield loss, and we're still looking at one of those really higher levels. So we need to get some sort of new information out of this market to kind of continue that old logic of feeding the bull. And right now we're in a little bit of a lapse that we just don't have that right now. Yes, we have purchases, but today's purchases, like stated, they weren't huge, so it wasn't anything to kind of grab the market's attention at all either. And we do need to consistently see these sales be shipped out and keep that trucking along to be able to kind of write them off the books as well.
Well, that's the thing, too. I think with we've got the sales, but we need to see the exports. We need to see the shipments.
Yeah, that's a big thing to watch. You know, a lot of people like to focus on the sales that we have, which is great and which is fantastic to see these sales, but we do need to actually see them shipped, or at any point they can be canceled, and that's a concern to this market as well, because you are coming into a presidential election. Things get a little bit dicey. If you look at what China did before the last election, they did take a hard line. That's a concern that they could come in here and do that again. And you do have those worrisomes that you might see a cancellation. Now, we haven't seen any hint at a cancellation. We continue to see purchases. So you have to imagine that they need this grain. And when you look at, as a degree, they do have a lot of issues on their production front for them to need these purchases overall, besides just filling an obligation as part of the phase one deal.
At what point do these markets start to become more of the demand story compared to, you know, more of the supply in the U.S. crop?
I think they already have. Actually, I think about a month ago we switched to the demand side of things. Now maybe the production, the drought helped spur that along. But remember, we had these China purchases while the market was down, so it was kind of just a bummer deal for us at the time. But at that point in time, we were looking at a record crop we thought we had on hand. We still may have that in parts of South Dakota, but no, I think we're talking about the demand now with China buying as much as they are. And to jump on that, what Kristi said too, that the shipment or the sales are great, but shipments, at some point in time, there's actually going to be a story about logistics. Can we get it all out too?
Yeah, that's a definite question that we question ourselves in the office, is that this obligation that China committed to for phase one is very, very hefty. And do we have the logistics behind us in the United States to be able to fulfill that? And that's a big question, like you said, that will get brought up eventually. Can we actually see this product move that big of scale to meet those numbers from China? Will they say it's not their fault, it's our fault that we can't get it out? That's going to be a big question moving forward. You obviously see the demand out there, especially if you're a North Dakota farmer right now. Basis is extremely favorable. Even in western Minnesota, basis is extremely pleasant for soybeans just because that demand is there. And that's been great because typically we don't see this go side and side, get that futures rally in the soybean market and see a basis level that remains strong and even narrowing. And that's a really good deal. And what the market's telling you right now is they want your beans now because that demand is there for China.
Especially too, I think once you start getting some of these ports, especially on the West Coast, they like to load soybeans. They like to load corn. They like to load wheat one at a time. They can't do multiples, can they?
I've never been.
That's a good question.
Yeah.
I would love to go see it.
I haven't been there either, but I know to Randy's point, you can't have a large shipment of corn sitting there. You'll have to get that emptied and out.
Yeah,
So,
I mean, you only have so much elevator space there.
it's not quite like an easy spigot like we have here at the beer cave or anything. No, it's tougher.
Are you going to have any other hard questions? We all I looked at Kristi. I'm like, I know she knows this. She looked at me. She's like, he doesn't know. All right, let's go. Great. Now that I'm all embarrassed.
Yeah.
I tell you, I really appreciate Kristi's comment about basis. That's something we've been monitoring for the last few weeks. Really interesting to follow.
Yeah, and I think that's one thing that doesn't get the attention it probably deserves is strictly separating futures and separating basis. So a lot of people like to talk about the fact of what is your cash price doing currently, and really you can separate those two and treat them a lot different. And so that's one thing to note is that there's a lot of basis opportunity out there, especially for North Dakota right now for both corn and soybeans. Now, corn's a different situation. A lot of you, if you're from North Dakota, don't have the corn acres you normally do. And so that is driven by that. But overall, when you look at it, you look around at these soybean basis and they are phenomenal. They are better than they typically are at your most narrow point. And they're asking you, for your grain right now at harvest, which a lot of you do deliver at harvest. And this is one of the best basis we typically see all year round. So it's kind of two birds, one stone, be able to get that cash flow going and help you out along the way.
And to add on to that, things are no better now than they were just as bad last year and the year before. So every year we sit here at Big Iron, we're usually at a seasonal low. Everyone comes up to us, asks if the market's going to go up. It almost always goes up after that, and I always tell people we're going to bounce from where I have no idea, but we're definitely going to rally at some point. So the rubber band up in North Dakota, whether it's weather or basis, to Kristi's point, we're just as extreme now on the upside as we were on the downside. It makes just as much sense that we have I don't want to say what I think the basis is here. It's better than you even think it is. Trust me, call your local.
Yes,
I don't want to.
I agree with that. Call and ask them what they'd give you for
Right.
a basis, because it's two different things between
yeah.
what's posted.
But it's better than you think, because now you add in the green beans to that, and I'm not talking about at the dinner table here. So there's going to be a mathematical equation. I have beans, but there's some green. But the last year before, China played real tough with us. They looked like they smoked us. I cannot believe 49 days for the election, they are buying beans every day, hand over fist. They're making the president look good. Every once in a while he needs help doing that. They're not tweeting about it, they're just doing it. And it's real, and so that's wonderful, and it's a great thing for the American farmer. You should be no more excited this year than you were bummed out last year and the year before. The Dakotas and the Plains are famous for extremes, and you need to be able to play the game and survive both. But there is an actionable thing to do here. And it's not to come grab us after the show and say, tell me why we're going to $11. And we could, but 10's pretty good. We're $2 higher in the cash market than we were last year, both by basis and futures. It's a great opportunity. And there's a chance the government's going to pay you again, because we do have election coming up, so let's just give away some more money regardless of the price. And you deserve it. You might actually owe taxes. I'm sorry. I mean, I know you guys hate to pay taxes. You might have to pay them. Or buy new equipment.
That's why they're here, yeah.
Or buy new equipment.
Yeah.
DuWaybe, what's the basis story in South Dakota?
It's the same. It's very narrow. And really, I think to sum up the basis, when the basis is narrow, you should sell your grain, or when the basis is good. Obviously, we know ways we can own it back if you want to own it back. Now, I know not everybody likes futures and options, but this basis is saying sell it now. What I'm going to throw out there is this basis probably doesn't stay this way once the combines start rolling. That would make sense, right? The reason why it's still tight, one, in South Dakota, because there's just not a lot of acres. So there's not a lot of forward selling. And this price all summer long has been low, right? Nothing was attractive and fun to sell or forward contract. Now we got up here. It happened so late, we almost don't know what to do with it, so the basis is still narrow. You guys start calling those elevators and selling the beans, what do you think the basis is going to do? It'll widen out, okay? So yeah, take advantage of the basis. Now, anything that's going to have to go to town for sure, what I would do, and we can own it back on a harvest dip. Don't worry about that.
Some farmers been making some sales in the upper, or just kind of holding off and waiting?
I would say that we finally reached a point where producers have been a little bit more apt to make soybean sales. It has been tricky, I would say, because you do have people starting to question, can you see 11? Can you see $12 beans? And you have those numbers chirping in your ear, and they ask me those questions, and could beans go to $11 or $12? Yeah, they could off a South American problem. But my job is not to get the high of the market. My job is to make sure my producers are still farming year after year. And we're at $10 beans with, a very attractive bean basis. And you're looking at anywhere from $9.20 to $9.50 cash for harvest delivery soybeans. To me, that seems like a logical choice to try and buy you some more time. Maybe you aren't happy with the corn price where it's at. Maybe you want to store your corn. This gives you that ability to be able to kind of have that cash flow and do more things. And like you said, yes, it is our job to be marketers. Yes, it is our job to trade. But when he says things like there's things you could do on the back end of things if you're not happy with where the futures are, or you think it can, there are obtainable things. Now, a lot of people will say, oh, I've done it before and it doesn't work out. One thing to note is if you're buying a call or a call spread and it doesn't work out, it means you made a really good sale. And that's our bottom line. Our goal is to make sure we're putting a floor underneath you to make sure we're consistently farming year after year.
With the basis where it's at, strategy becomes important, I guess. Marketing plans, we touch on that every year. We talk about the need to have a marketing plan to take advantage of this type of a market.
Well, yeah, Mike Tyson always says everyone has a plan until I punch him right in the face. So I would say the frost was a little bit of a punch in the face, the cold weather. The decision to plant or not plant, when you look at the PP that's starting to show up, the market between the coronavirus and a lot of the decisions that are going to happen now are because something happened before. And I do notice that our best customers and producers, they make a decision and they're happy with it, even when it doesn't go their way. To Kristi's point, sure, if you sell cash now and you buy a call and it doesn't work out, you have to go back and figure out the math. And that's what happens. I notice, and I would be interested to see what the rest of the panel think, but the more we go up, the less you sell, the more you get emotional. And if I would have told you 4 weeks ago, don't worry, beans are at $8.80, $8.70, but they're going to go to $9.10 on Sunday night, you would have just said, you're so full of it, go back to whatever Democratic state you think I'm from, which actually I do not live in Illinois. I live in Indiana, where Republicans were allowed to carry guns, and it's a great place to live, much like yourselves. But that's what's happened, and as the markets continue to rally, you're freezing up, and it breaks my heart, and it probably breaks all of our hearts. So we can kind of look at ourselves as personal trainers. You can have the treadmill. I have a horrible feeling you have clothes hanging from the treadmill and you didn't lose any weight. So it's time to start working out, and I hope I answered your question.
Just a reminder, too, if you have any questions, raise your hand. We've got microphones around here if you want to ask a question.
Do any of the other panelists have something to add? Yep.
Yeah, I would say along with the lines of separating basis and futures, there's a big opportunity right now in the corn market to be doing DCHTAs to roll out later. Now, it's not guaranteed that you can see a bigger carry, but typically, especially on a year that we have a big carry out, you see these carries grow and to be able to roll that out. And so there are very easy ways to separate yourself out and take advantage of one side when the other side isn't necessarily working. And it just so happens that, right now in the bean market, you kind of have both sides working for you. Typically, it doesn't happen. And, I think all three of us, if we could, beat something to a drum up here, would be to make sure you're doing something in beans right now and not freezing.
Yep.
Anything else to add, Dwayne?
Just a statement I try to tell a few people is don't get super bearish at the lows and don't get too bullish at the highs. Sounds very simple, but it's very true. So now that we're at the 1-year high for soybeans, don't be the raging bull. And a month ago, remember how bearish everybody was. I had everyone calling wanting to sell everything because it's going to zero. So marketing is so tough, right? Emotionally, on everybody. So try to block those emotions out. Go back to your spreadsheet, see if you're making some money on beans, make a few sales here. Obviously, we're saying, I don't mind saying it, I'm bullish beans long term. So there went, I just killed everything we just said. No one's going to sell anything. But, you know, make a few sales up here. God knows we're not right all the time. And that's a long-term play. Like I said, maybe if you hang on to them, off of my advice, and wait 3 months, maybe you paid 25 cents in storage costs and market went up 30 cents. You know, that's not gaining much either. And maybe the basis widened out by 40 cents. So take the basis now. We'll worry about the futures a little later.
Tommy, you'd hinted at supply a little bit in some of your responses. You talked about the frost and the freeze. You also talked about prevent plant. And I know you and Don went on a prevent plant tour earlier this spring. It's something we were watching. It's been a story up here. I'm sure some of you, if you farm out in the audience, you probably have some PP because we had quite a bit. What is the role of PP in the balance sheet now that we're into harvest and the market discussion?
Well, part of the which I'm impressed that the government allows you that if things aren't going well to stop what you're doing. Folks who continued to plant those days that Don and I were driving around, unfortunately, those people who planted soybeans after those prevent plant dates, I've called them since then, and they're not very excited with the outcome. So prevent plant and insurance is there for a reason. I don't think they're gentle suggestions when they tell you to stop planting. I think they mean it. And I think one of the conversations that'd be interesting to have, whether it's on this stage or next group or a client or someone watching, to ask is, have we pushed the varieties up here too far? Because when I started coming up here 6-7 years ago, and I'm telling them, well, we use 105-day corn in Indiana. What do you use? And I was surprised. We're in the 90s, and now my clients who do feel they have a better crop, the variety of the beans is a lower number. There's a huge difference between something that got put in early and something that got put in late. And so maybe one of the questions is, have we pushed things in technology too far? Do we need to go back to the mathematics of this is when we should try to plant it, this is when Mother Nature said we're not going to plant it, and I need to get my ego out of this and follow the math and the rules and use the program to its ability, because I think the people who plan beyond prevent plant date are going to be terribly disappointed and have we could talk about basis and futures all day. We can't even start to talk about discounts because it's not for any of us to determine what those are going to be. And the people at the elevators can't even tell you because they don't want to touch that subject right now. That could be the real horror story here in North Dakota.
Wayne, did you have anything on PP? Was really big in your area of South Dakota?
It's a very popular crop we have there, yes. No, I farm just along the state line there, North Dakota, South Dakota. We have planted about 9% of our ground this year after last year's 13%. And on the 9%, I think we actually have some ground outs again. So we're just in a wet area. But to Tommy's point, I mean, we pushed the pencil very well. When it got to June 10th, that planter got parked and put away. The last 2 years, or the first 2 years, where I told people that maybe you don't push the envelope too late on prevent plant. It was there, insurance is there for you. All other years, I've said go ahead and push it because why? I was more bullish in the prices. And I thought we had a better chance of a rally. At the time this spring, it didn't look good. So that was a nice option to have, actually.
We got an update on FSA PP acres on Friday, right?
Yep.
And I guess how big of a discussion will that be going into the October report?
I thought it maybe would be a little bit of discussion on Monday in the market because it came out Friday afternoon. We're over 10 million total prevent plant acres in the nation now, which is the third largest ever. And what it really did, though, is it just justified what USDA did back in June 30th when they had lower acres than everyone thought. So it really didn't move the market. It just justified why we're at where we're at.
Has the market been figuring in, along with the PP acres, the dry areas?
I think that the dry areas will get factored into more of a situation on yield side of things. I think that's a concern of mine is that when you talk about this frost freeze, a lot of people have said when it comes to the corn market, it's probably more of a test weight issue than it is anything else. And test weight was so horrendous last year across the board. And you never really had USDA come out and acknowledge it. Now, obviously, you had yield declines, but you never really saw them acknowledge those problems. And I feel like that might be hard to acknowledge again this year. But I do think that you have them trying to take those early steps, like taking the 500,000 acres out of the corn harvested right off the bat. Now, obviously, you you saw 500,000 and you're like, come on, you have all these reports of 13 million acres being affected by this wind event in Iowa. Why are you only seeing a 500,000? You have to remember that when you talk about acres affected, some of those acres maybe were affected 15, 30%. Now they took the step to wipe out some of that production on a 500,000 acre slide. So I do think you have that, but I think you're waiting to kind of see what's to come out of these dry concerns, because I think you really don't know. You have varieties, you have research and development that have done so much for drought tolerance. You take it 3 years ago when you look at North Dakota, and I had all my guys swear up and down that their wheat crop would not pencil more than 10 bushel per acre, and you came in with them being okay, and a lot of them didn't even pencil a insurance payment. And so I think that says a lot for what you had for subsoil moisture and what you have for drought tolerance now. So I think people are waiting to see kind of what's to come with that. And I'm fearful that that's more of a bean story than it is really much to amount of a corn story.
What about the frost and freezes we were talking about? That had a little bit of an earlier frost freeze in the northern plains last week, and we were hearing mixed reports from farmers of, yeah, it kind of hit or it didn't, and we saw on the crop progress report out yesterday afternoon that maybe it did impact the crop, at least up here, soybeans in North Dakota.
From a GDU standpoint, we're a lot further along than we were in other years. I think that's really bailing people out. Last year was bad. If we continue to have haze and the smoke like this, it's supposed to be 80 degrees today, and we're wearing jackets. Dwayne's wearing a really nice one, but I look so good. But the weather, we pushed this crop along, and the hybrids are there. I mean, I don't know a seed salesman out here at Big Iron who's going to say, I sell really cheap, low-quality seed. So, I mean, come on, do your job. We're paying a lot for the seed. There's tens of billions of dollars spent on technology. There's also, and something you haven't brought up yet, but there's just been an incredible amount of drain tile put in. And Kristi and Dwayne would know also, we have clients who have drain tile who we're marketing big bushels for every year. They're getting it in first, they're getting it out first, they're getting the better basis, they're getting the quick ship. And so if we're going to flood every year and be cold and wet, that might be the next step. That might be 10 years from now. I don't think I'll be here, I don't know. But that I would imagine there's going to be tens of millions of acres in the United States will continue to get drain tile.
One of the things that we're starting to hear more and more about from the weather forecasters is La Nina. That means dry weather in South America. It also impacts us here.
Yeah, they do have it transitioning to La Nina. We've transitioned to La Nina briefly a couple times over the last few years and never really stuck it. I think they're calling for a little bit more aggressive. It does call for hot and dry conditions. I'm in the camp that they can't tell me what's going to happen a week from now. How are we really going to forecast next summer for production concerns? I will also say that if you do hot and dry for Brazil, that's going to be a gift to us here because they are forecasted at a record carryout strictly based on increase of acres in South America. So you're going off average yields and they're forecasting that record production number, and that's just because they're growing. It's profitable to them. It's extremely profitable to them with the currency evaluation between the US dollar and the Brazilian real, and those are all things you need to focus. So you got to hope to some degree that we're tampering production levels, but it's very, very early in the game when you start to talk about La Nina, and you don't even really have South America planting right now, so there's a lot of questions up in the air yet.
Sorry, guys, before you go, just a friendly reminder, if you've got questions, this makes the panel discussion really exciting when you are asking, so feel free to raise your hand and we'll get you a mic. So someone have some, oh, Don has a question. Thanks, Don.
We're in a presidential election year. What impact does that have on the marketplace?
The biggest one you're going to see across the board. You guys can talk all you want about supply, demand, everything. It's going to get a very dynamic move forward. Like you said, it's 49 days till a presidential election and you have China bowing over and buying tons and tons of U.S. ag product. Is that because they need it? But you can say that China and President Trump are very, very different people and believe in different things. And so it's very odd that you see them consistently buy it. Now, the concern for the market would be that they come in here and they cancel it because they can cancel it. Not only that, there's a big unknown about what's to come post-election if you shake up what's in office. You know, this economy, when you look at the stock market, like your first quote of saying it can't go down, we have that, you know, inflation concern, those talks about that the stock market's really rallying. The economy in general is actually very fragile when you look at it as a whole. You have concerns about what's to come with COVID. Are we going to consistently have issues? Could you see another shutdown that could greatly impact ethanol? So this presidential election is much bigger than people are really talking about, and I feel like actually it's not even really getting talked about.
And to add on to that, the volatility level in grains, people think it's busy, but when you look at volatility to what we're joking about, which isn't a joke, stock market can go down, but in general, when I have farmers texting me, asking me what I think about Tesla, I mean, so one of the side effects of coronavirus is that sports stopped. And my nephew was over at my house the other day, saw my new computer, wanted to know what type of chip was in it because he owns a fractional share in NVIDIA. I don't know if you're all familiar with what fractional shares are, but some of the stocks have went up so much, you can buy just a piece of a stock. The world's looking to gamble. I had no idea what a bunch of degenerates we were watching sports, and there's a bunch of people here who can't believe NDSU football's not playing. But the world will go on. But what happened is people's appetite to take risk, it's like they want to buy stocks. And what would be interesting, it's not as easy to buy grains, but I'm surprised how low volatility is. Not only right now on an S&P put or gold, but right now the markets have started going sideways, and I just can't imagine that one will even know the election results on the day of the election, and it could be interesting. Everyone jokes, Nancy Pelosi could be the next president, but if you understand, it depends what channel you watch. Last night I watched CNN for a few minutes and then Fox, and I got all confused. But it doesn't look like it's going to go smoothly on November 3rd, and I don't know if we'll have hanging chads or what it'll be this year, but there's going to be some fireworks. So you know that, right? You didn't know it was going to freeze, but we know what day the election is. That's not a secret. Don't have the shock face when the results didn't go your way. Half the room's going to be mad no matter what. Maybe even more, I don't know. But we still have to go on. We have to farm. And so in a weird, sick way, it's like an opportunity. And there's a food security question that's starting to happen in the world. You see hogs going up. You see cotton going up. People say, what's going on? The markets are going up. I'm like, do you realize how low they were? I mean, we have so much opportunity to go up. You see a company, I could name so many companies. Go back to the gambling. Penn Gaming, they went down to $5 a share during the pandemic. They're trading $65 a share. They're an app that allows you to gamble and watch sports. I mean, we're talking about food for the world, and you all here in this crowd are the best at it in the world. We have some of the most fertile soil here in North Dakota. We just have a little problem with the weather once in a while and some other things. But I think the food story has so much more of a long-term bullish perspective. And with that, I'll leave you hanging. I think the markets could go up and you still won't make money.
Is that we need to make, or traders need to think of commodities as an asset class at some point?
You could.
Before that money can come in.
Yeah, but it's not easy to access the markets. As we all know, there's way less commission houses. There's less professionals in the business. There's a bunch of people who could enter the markets through retail. Unfortunately, there's a lack of education in what we do. That's why people hire us. And I always laugh that you'll pay us, you'll hire us. I'm like, you can do this yourself. You're like, no, I want Kristi to do it. I want DuWayne to do it. I want you to do it. I'm like, all right, I'll do it. And so there's a lack of education. For some reason, there's this false sense of security. You just buy stocks and they go up. I think we could get in trouble of this attitude. When you look at the dynamics of the market right now, we have $10 beans right now. We have $9.50 for Nov 21, and we have $9.25 for Nov 22. But then when you look at corn, we're $3.70, $3.90, $4. I find it really odd that we're $4 corn 2 years from now, and we're at a level in beans that I'm not really interested in talking to you about. So if there is this bullish commodity story, watch the curve. The market is math. It's telling you what to do. And I don't know, maybe Kristi or DuWayne, did you have any customers who called you and said, I know crude's going to go to negative $40? Sell me a contract at negative 10. I'm really going to ride this one out?
No, but I did get a guy out the day before, and he's very thankful I did. But that was a scary ride.
So
Yep.
you laugh, and it's being recorded, and people are like, why is he talking about negative crude? The world changed. The day crude went negative, the world and something called the skew on options changed. the CME group's announcing we're going to let it go negative, and I'm like, it can go negative?
That was a dynamic that probably essentially shouldn't have necessarily been talked about before. Like as soon as it looked like crude was going to go, to zero, you had a lot of people that are like, okay, I'm willing to take this risk, right? I'm willing to let it go to zero. And then as soon as you had all these people say that, all of a sudden CME came out and said, actually, we're putting negative options on the board, and you tanked the market in it, and it brought an uncertainty to a lot of degree about how much of a role do outside players play in certain situations, right? You think, okay, crude's at a negative level, like crude's at $5, why wouldn't I buy crude? There's other dynamics behind the situation, but it did bring an interesting dynamic to people concerned about what could happen to the grain markets if you continue to have COVID happen with what it did and what it did to ethanol markets. And the tricky thing when you looked at ethanol is that it plays such a big role in corn, and it wasn't necessarily that ethanol was not profitable. We ran into a situation where ethanol plants legitimately could not get rid of their ethanol, and so they had to shut their doors for that reason. And that brings a scary dynamic to the market when you're talking about a product that can't move whatsoever. You have a lot of ethanol plants that are willing to grind at a loss for an extended period of time because they can make it up somewhere else, or they can make it up from your side products. But when you talk about the situation that they can't grind because they seriously don't even have room for it, that gets a little bit scary to the market. And we have to remember, when you wrap it back and you talk about all this demand showing up from China, demand structure for export markets in corn is much different dynamic than it is for soybeans. It's make or break for soybeans. It is not make or break for the corn market. When you look at it, corn has a lot more moving parts when you shuffle down to the carry out you're at. So you can talk about the corn market. You can talk about how China's coming in here and bought a whole lot of corn, and they typically don't do that. But you also need to play the role of, is ethanol going to be profitable? What are we looking at for feed use here? Those are two big dynamics to it. Do we have a backlog moving forward continuously for hogs, for cattle? Is that something we could see pop back up come winter if we see places start to shut down again? That makes the market a little bit tricky, and that's where we come in and we say, okay, we know that there is something that we can control, and that's that we can control a sale in soybeans right now at a profitable level for most, to be able to ride out uncertainty a little bit longer for other markets.
You talk about the money that's been thrown at COVID and with the national debt. How does that play into with the deflation or inflationary? How does the market react to that?
Yeah, inflation's been one of the top talks that I've had from a lot of my guys on an outside perspective, right? If they're not talking about politics, that is, then they're asking about inflation. And so when it comes to inflation, you look at things like inflation usually ties to possibly seeing a lower U.S. dollar. A lower U.S. dollar brings more business our way because we can then sell our grain at a cheaper level to other nations, which is great for us. That we need to diversify and make sure it's not just China buying our product, and that works out great for us when you see that dynamic come in. So inflation has a lot of people's talks, and it's not just about the pure cost of a good going up. It also relates back to the U.S. dollar and playing a big role when you look at it that way.
Mm-hmm. When you talk about inflation, I touched on earlier that I think the markets could go up. I'm not going to write anyone a check if they don't. But I think fertilizer prices could explode too. So you'd be a fool to think if a year from now we come back here and we're $4.50 corn, $10 beans, if you think fertilizer levels and seed and everything else is going to be at this level, the older guys in the room realize that one of the problems with inflation was not that the commodity you're growing didn't appreciate. It was that all the things you had to do to input into that commodity. So I could sit here all day and say, hey, $4 corn looks interesting in 22. And someone should be looking at me cross-eyed saying, did you lock in your fertilizer for 22? No, you can't do that. Or maybe you can. But until you do that, there's a whole bunch of math that goes into it. It's easy to come on the stage and say you should do this, you should do that. But I'm always surprised why someone's willing to prepay for goods and not then interested in selling them out. And I have a feeling this, if we do have inflation, this could really get away from us. And you look at lumber. Something as simple as my parents recently bought a home. Is a very small, modest home. They built the home right next to it. A month later, the price of the home was $30,000 more. This is an extremely small retirement community. $30,000 more for a home in 30 days in Valparaiso, Indiana. Lumber, vinyl, windows. Maybe it's not hitting our market yet, but when it comes to stuff, it is not easy to get stuff. You can't go buy tackle stuff. because it's all made in China. You can't get a bicycle right now. I had 3 old bikes. You can see I'm not using them that much, so I sold them. And I told my wife, I listed my old Kestrel bike I bought 25 years ago and when I was 60 pounds lighter for $500 on Facebook. She goes, you're not going to get $500. I go, well, I listed it for $650, but we'll take $500. 2 days later, someone bought a 22-year-old used bike from me for $500. And she said, am I safe to sell this bike? I said, no one comes to our house to rob you to buy a bike. I go, sell it to the guy. Call the neighbor. That's inflation. So it's hard to get parts. The system got a little jammed up for a little bit, and I think there's a world security food problem that I'm not going to get caught short where I can't buy ground beef. If it's Sunday and we're making chili, I'm not going to the store and saying there's a limit of 2. So I now have a freezer full of beef that I bought locally from a customer. I think that's the trend. That's going to happen. Think of it from a world perspective. You got to keep the people fed. So if you have to pay a little extra for it, that shouldn't be a problem.
So is that what China's doing now? Is this hyperinflation thing? Is China going to buy everything, get the commodities there, and then who knows down the road?
I haven't spent a lot of time in China, actually 0. I have been to Hong Kong, and it's probably a small price, although it feels like a lot to you when beans rally $1. When you think of the end product, when you think about how much corn's actually in a box of corn flakes, remember when corn went to $8 and the price of cereal went nuts? They're like, there's 7 cents of corn in there. The box and the crude oil is what made it go up, and the ability that they thought you'd pay for it, and we did. And corn and cereal never came down, and so that's probably going to keep happening in other ways.
Yeah, a good way to look at that would be if anyone's, has cattle in here, that dynamic that you saw in cattle. And when cattle prices skyrocketed a while back at the retail level, it wasn't necessarily that the farmer was making more money. It was all the product that came into it, the shipment costs, the crude oil, the trucking, the employment, everything of that coming into it is what made it so expensive. And that's a concern to this market, that you saw these prices go up on a retail, but you're not. And when you look at it, you're trying to factor those in. When you start to hear Congress step in and try and say they're going to do something, especially for the cattle guy, when you see them losing money and then you come and turn around and you see a packer making a ton of money on that side of things, those dynamics need to shift a little bit. But inflation could result in higher prices for that, but it's more of a concern on what's to happen from a bigger picture side of things, on your inputs, on everything else related to that. Those are concerning to the market. And so when you look at it and you say, okay, for example, you talk about D's 21 corn. D's 21 corn almost hit $4.90 or $3.90, and when you look at that compared to where we were not that long ago, that looks great, but you need to make sure that you're not just doing marketing, that you're also looking at some inputs, or you're not just doing inputs, but you're not looking at your marketing. They need to go hand in hand to a degree to make sure you're not caught off guard on one side.
We haven't talked a lot about wheat here today either.
Oh, we haven't. Can't leave wheat out, right?
Yeah, I know exactly. We're sitting on global supplies that are record large of wheat. You see this market just kind of sliding where it's at, or staying range bound?
We've rallied because it's such a global market, like you're saying. We're following the Russian price mostly right now. Actually, they've gone up because they're in a bit of a drought, and their farmers just are not selling. So their exportable wheat price is going up. We always do this in the U.S. right away, too. Russia goes up, so we think, oh, they have to buy from us now. So we jack up our price before they can even think about buying from us at the cheaper level. So we've rallied. We're still more expensive than they are. But I'm not really bearish wheat, though, Randy. I feel like we've kind of seen the harvest lows. It's maybe more because of the whole hyperinflation thing that I'm also buying into, that I think wheat can get better, but I also think Minneapolis wheat, the basis, can get better up here. You're actually seeing that already a little bit. You may see another 30 cents of that as you go into winter. So I'm saying hang on to the wheat. I think you got, better potential in the future. But, the same story goes in wheat. Every year we've been up here, every month we talk, global supplies are still very high, so don't get too crazy bullish.
I think we could have a lot more longer-term storage wheat for this crop.
Yeah, at least short term. I'm not a believer in storing grain for years. Obviously, I don't think it should have a birthday. But I'd harvest wheat, store it till December, January. That basis would pay for storage almost every single time.
you'll have the ability for a lot of producers in North Dakota to be able to store wheat this year just because of a lack of a corn crop. So I think that plays a role into it. But one thing to note for wheat is if you consistently look at it for the last 3 or 4 years, there's been some substantial carries to the next crop year. So when you look at it, your wheat price might not be great right now, but next year's wheat is some levels that we really struggled to get much higher above in the last year. And to take advantage of those big carries is the best advice I have for wheat.
Problem with wheat, I don't want to bum anyone out, but when the wheat market goes up, it sends a signal to the world to plant more wheat, which every country in the world could almost do. Corn and beans, if we have a production or a demand story, which we have all those right now in the United States, and if South America did have a problem, we could have an explosive market because it's us, it's them, it's us, it's them, and we know we have a guaranteed customer over there who's saying, we're going to buy it all right for the election. Wheat, if we go up, and we can go up, if all 3 classes of wheat go up, you're going to send a massive signal to the world saying, I know it's not very profitable, but it is now. And there's so many places you can plant wheat that long sustained profitable levels in wheat, I've never really seen it in my career, besides the goofiness of the commodity markets of 08 and 12. But you can understand, we had $130 crude oil back then, and we had a lot different structure. Going back to crude oil real quick, I was thinking about something. Something happened Sunday night that shocked me. BP Amoco came out and said that they plan on low demand, the coronavirus and everything, the pandemic's really changed the structure of crude oil. And so to truly have a great bull market, you would think the energies would participate.
Yep.
And BP Amoco, and right when I was interviewing with you all earlier, I saw a tweet come out saying that ExxonMobil had traded down like 8 or 11 of the last days, new lower lows. So if you look at oil stocks, there is not a big, bad bull market in energy. And corn is energy. A third of the corn is pure energy. Yep. And all grains are energy. You can turn them into alcohol, you can turn it into food. So grains are energy. If there's not a big bull market in energy, I have a hard time getting on the $4 or $5 corn story and the $12 wheat story. And this is not 08 and 12. We are at a totally different place in the world, and that's the deflation question that we should have touched on.
Yeah, I'd agree with that. I've had multiple questions about comparing this year to 2008, and I don't think you can compare them to. And like you said, that crude oil plays a huge dynamic into it. And that also played a huge dynamic in pushing the corn market to where it did, because you can't sit here and ask people, maybe here in North Dakota and in Minnesota, where you feel a little bit more, connected to your producers, to your farmers, that you want them to succeed. But other places around the world, you're not going to see them choose an ethanol blend gasoline if you have gas cheaper or even remotely close to it. It's just not going to happen. Now, luckily, if we can create a dynamic to have our ethanol exported, that would be great, but we can't rely on that, and we can't see ethanol succeed in the next year or two unless we have something happen on crude oil.
To put some numbers behind it, sorry, Tommy, the ethanol demand, we're about 90% of capacity of pre-COVID levels. You take that over a year, that's about 500 million bushels of corn. We're at a 2.5 billion ending stock right now. You had 500 million. You're back above the 3.0. So to Kristi's point, yeah, we need to see crude oil go higher, gas prices go higher, ethanol demand goes higher. We need that too. Not just China buying.
Has COVID long-term, with people traveling less, have we discovered that we don't need to go into our offices and work?
Yeah, I think that plays a huge dynamic. I had a producer, and I love the way he thinks, and this is one of the first things he said to me right when COVID happened and shut down. He goes, this will be very, very problematic for years to come when you look at it on a structure of how we've built America and how we succeed on prices, that we don't need the big office buildings anymore for people to go into. We don't need people to be traveling as much as they do. Look at the cities. I mean, I don't know if anyone's gone through the cities, but it's like a breeze to go through the cities lately, and that place usually gives me the worst anxiety ever to drive.
Try to go around them.
And so, I mean, it is not as bad as it used to be, and that's because so many people are working from home. You have people, even in Fargo, that have had employers tell them, we don't foresee you coming into the office until at least 2021, if not later than that. And then you take away all that driving, and you take away the fact that you have people that are out at work and take a lunch break, and then when they take their lunch break, what do? They go out to eat. They maybe go shopping. They hang out with their other coworkers to go. After work, they go for happy hour. You know, you see those dynamics kind of shift where you aren't seeing the spending, you aren't seeing the traveling, and it's not so bad for the family structure, for the family life, and that's where you need to get back and see those values where they stand, but it could cause some problems long term for the demand that we've built. Now you have people that have started to say, when are we going to see travel start to pick up? When are you going to see things like that happen? And until you kind of take away that fear, you're going to have people that choose to go more on a local basis than going to a further destination, to flying. You know, you question how are airlines actually surviving right now with the sheer volume that is actually traveling. You have you have big businesses that typically send their workers on trips, business trips, coming in here. For example, you know, anyone that's traded up here, we get regulated by NFA. NFA is constantly sending people to go do audits. Their audits are now mostly done virtually for the most part, unless there's a problem. So you're going to see all of those kind of dynamics shift a bit, and it is worrisome.
Some people look at the pandemic as a disaster. I look at it as a blessing for myself that I am married with kids. I like my wife. I don't know, Dwayne, how about you?
Yeah.
She's watching
Yeah,
live.
I was quick on that one too.
Kristi, do you have anything you'd like to say?
Yeah, I have three. Yes, I have said that it brings a dynamic to family, so that does mean that I actually do like my husband too. Don't worry about it.
But for me, it's been a wonderful opportunity. I used to travel, get paid to speak. I don't have to travel, but you still get paid to speak. I can educate way more people. I can set up I don't like Zoom meetings, but we set them up all day. So the amount of money that I personally spent on technology in I did something great and something stupid. I spent a ton of money on technology. I wasn't smart enough to buy the technology stocks at the low. Right. And I was part of the reason that Microsoft and all these companies, when you look at the amount of chips and all the schools are buying iPads and it's really changed things. And what the pandemic did was it exposed weaknesses in your business model that you never thought would happen. And we have black swan events that happen, but you always don't think it's going to happen to you. In this case, it happened to the world. For me, it's been a wonderful opportunity. I'm confident to come to anyone in this crowd, except for maybe one guy back there, to go visit him at his farm or ranch. But some people are scared to travel, and that fear that's in you is it's just really scary. And I can reach more people through technology and embrace technology. You're doing it here. I was just at my apartment in Fargo before I came over here. I watched the first show. Looked great, sounded great. And here we are. My wife's probably watching. I know compliance is watching. Hi, compliance. And so the world's changed. And if you adapted to it, great. You know, there's people who still probably like to farm with, open cabs. But technology's changed. And what happened with the pandemic is it pushed what was going to happen. I don't know what you guys think. I'd say several years. We're 2020, but we are at a technology level of 23. By next year, we'll be where we would have been at 25. We have pushed technology to the next level. The one thing you should be thinking here is, how did Tesla, a company that doesn't really make a profit, that makes battery-operated cars, how did they go from $400 to $2,400? That should scare you as a corn farmer, because technology's changed. And what Kristi talked about with the blend and ethanol and talking about the energy in it, are we missing the big picture, and is corn's gig over? I believe North Dakota's story is protein. I believe North Dakota's story is raising protein, turning that protein into protein, and exporting protein. We're not there yet, but I think it's coming, and I think I'm so bullish North Dakota, but it's not on corn. Maybe on hand sanitizer, but not on corn and ethanol.
Some interesting things to chew on there, and I'll invite anyone in the audience. Does anyone have any questions? I'm so surprised, because usually we get one or two.
Yeah, I would say that if you guys have a question, somebody else has a question similar to yours. So if you do have anything, I would ask it, because you're not the only person with that question here.
Where's our cattle guys at?
Right?
Oh, we haven't talked much cattle.
They're too busy.
Right. Well, we just talked about everyone staying at home, right? We're not going out, we're not traveling, we're not eating, you mentioned. I'm actually kind of surprised the cattle market went through this as well as it did, but I'm also a little bit nervous for it moving forward. You know, the restaurant demand, we ate outside this summer, that's good. But now New York City this winter is going to be open to only 25% capacity inside, and that was just a couple of weeks ago. It was zero before. what does that do to restaurant demand moving forward? It makes me a little nervous for the cattle market.
I had a friend that actually lived out in California and Oregon and got laid off, obviously, with COVID. And she came back home and she's like, it is a different world here. It is like nothing has changed. And I'm very thankful for that. You've shifted some dynamics. But for the most part, our way of life is pretty darn similar to where it was in the years past. We can still go out to eat. We can still go in places. We have most of our places still open. That is not the case when you look at it as a big picture on the world as far as it goes, from California over to the East Coast. It's very different there as far as what you can do, what you do. Do you choose to go out to eat? And, one thing that we're having supported is look at things like milk prices. I think that is something that could be very, very scary and something to watch is how high it went and then how hard it dropped off. Lumber obviously is another one and those volatilities, but when you look at food and you look at milk prices, what they did over this last little bit, it is a different dynamic. You look at rice, those are both contracts that don't get talked about, milk and rice very much, but what they were able to do should scare the market right now on what could happen if for some reason we come back and say we don't have a production problem. What happens if we come out here and say, oh my goodness, yields are out of this world for enough areas to offset the slight yield reduction? What do we do if you come in here and say we had enough subsoil in Iowa to make it through these? Yeah, things looked ugly, but everything penciled okay when you look at it. Those are concerns that we should have right now and make sure that we're choosing some form of risk protection on the bottom line.
All right, we have to wrap this up here. We're getting very close to the end of the day here. Any final questions? Yeah, any final thoughts here? Words of wisdom?
Tommy, you said we were going to see prices higher but not make money earlier. Did you answer that? Why that's not going to happen?
When prices were higher years ago, I became a commodity broker in 2014. We were coming off the big bull markets. There's a lot of companies that aren't around. So when the customer asked her, is this going to happen? I would say call your broker at Lehman Brothers or Bear Stearns and ask them to buy it for you, right? So the whole speculative world, from the commodity trading standpoint, there's not as many people left to buy this stuff. But if they come in for it, it'll be intense. But when I became a commodity broker, we were on the big down cycle of coming off of $8 corn, and the input prices didn't nearly come down as fast. So I knew plenty of people selling $5 cash corn who started losing money because their cost of production was there. And it took years to catch up. I feel like this year we were truly at, wow, you could have low-cost production and prices rising. The reason I think the market could go up and you could lose money is, number one, the government's going to get out of subsidizing you. Every day the market goes up, you should be scared and disciplined and continue to set floors and make sales because they're watching the markets too. As the government gets out of subsidizing you, they are subsidizing you. If anyone's in this room who doesn't think they're partnered with the United States government, come up to me afterwards and we can go have a snow cone or something and fight it out. Two, the input people are just chomping at the bits to raise prices. The second you start doing better, prices are going up. And my fear is we explode higher, prices go up for a year or two, we come down because we send a signal to the world saying overproduce, and the world will do it.
I would say bottom line is try not to be too stubborn. I'm a very stubborn individual by nature, so I know how hard that can be when you look at it and do things. But try not to be too stubborn because sometimes that holds off and you lose your opportunity. For example, I used to be part of a marketing group on Facebook, and it drove me absolutely insane. I don't know if you guys know about this.
Your IQ probably went down.
I couldn't handle it. I couldn't handle it. And what it came to is the comment that pushed me off of it was a producer that was right when the market started to tank last summer, and a producer came out and he was like, can you believe it? The United States is going to start importing corn from Brazil. How dare them? They're just going to give us a short end of the stick. We're not having a crop. We get the potential of a rally, and now they're just going to go get it from somewhere else. That is the dynamic of agriculture now, is that there are two people for corn. There are two people for soybeans. It is going to take a second problem to really materialize on something, and we need to make sure that if we have an opportunity in front of us, we're taking advantage of it some way, somehow. It doesn't mean that you need to cash out. It doesn't mean you don't need to have your foot in the door, but at least locking in your bottom line, I think you'll be happier with yourself, and I think your banker will be a lot happier with yourself as well.
Just a quick summary there, too. Driving up here, I got a few phone calls of questions. Did the market top? Was it the high on Monday? Did we top this week, and are we going back down? Obviously, I don't know that. it shows some signals it might be, so you sell a little bit of cash. What I have been telling people to do, if it isn't top tier, what do you do moving forward in this bull market? In the spring, we like to sit down and make these marketing plans, right? Sell these corn at 370, 375, 380. It's funny, those just went by the wayside this summer because we never got up there. Actually, here we are there now. It's a really odd time of year to do it, but I would say if this continues, just scale up, sell from here. If you can make money, you'll be fine. We'll be farming again next year. So go back to those spreadsheets. I know we always say it a lot, but look at your profit loss. If you're making money, go ahead and make some scale up sales from here. If we rally, if we were done yesterday, hopefully you made some sales, and it's not too late to make some sales. It's hard to make sales on the way down, but don't do that guy that calls me and says, well, if it rallies back up, I'll sell now, because it won't.
Well, let's thank our guests for being here today, Tommy, Kristi, and DuWaybe. Again, give them a big round of applause. We've got another panel coming up here shortly, so we need to get off the stage. And you guys hang around at all if somebody has some questions individually? Very good. All right.